The self-directed account. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. On today's AdBits, I'm going to explain exactly what is a self-directed account. So this is going to be a basic and I think very interesting podcast. It's going to give you the fundamentals, the foundation between the self-directed IRA and the self-directed 401k, and also discuss the advantages of the self-directed account, its origin, kind of what it all means for a individual who has a retirement account, right? There's 65 million IRAs, 13 trillion plus in IRA funds as of 2024, over $33 trillion of retirement money, including 401k funds. So a large bundle of money. And for most of us, it's our biggest assets, our biggest savings tool. So it's very important to understand the rules behind the investment opportunities involving a IRA or 401k. And that's why this podcast, I think, is so crucial to the average, and not just average, but the advanced or beginner retirement account holder, because when IRAs and 401ks were created back in 1973, the tax code didn't distinguish between an IRA and 401k that invested in stocks and an IRA or 401k that did non-traditional investments, basically assets that were not publicly traded. Essentially, as of 1974, the tax code categorized three types of transactions outlined in section 408 and 4975 of the tax code that are essentially prohibited. You can't do it with an IRA or 401k. Otherwise, you can do it. So the first two are life insurance in section 408, which can be purchased in a 401k so long as your plan documents allow it. Collectibles, like art, cannot be purchased in an IRA or 401k. And then the third and broadest category is found in section 4975 of the tax code, which in summary says the following. You cannot use your IRA or 401k in any way that directly or indirectly personally benefits you directly or indirectly, or any of your lineal descendants, your parents, your children, your spouse, daughter-in-law, son-in-law, or any entities controlled 50% or more by such persons. Otherwise, you can do it. So whether it's real estate or gold or cryptos or hard money loans or real estate funds, private equity funds, venture capital funds, hedge funds, you name it, you can do it as long as it doesn't violate those three categories of prohibited types of transactions. So the whole concept behind self-directed account was created back in 1974. There is no definition, and the word self-directed IRA or self-directed 401k is not found in the tax code. Okay, you can call it anything you want. You can call it a non-traditional IRA or an IRA alternative or a 401k alternative, whatever, it doesn't matter. Essentially, a self-directed account allows you to self-direct the funds into investments that do not violate those three categories of transactions I just mentioned. Life insurance, in the IRA case, collectibles for both IRA and 401k, and prohibited transactions under 4975 in the case of both an IRA or 401k. Otherwise, you can do it. Okay, so a self-directed account just means you have more investment freedoms, more controls. And then from that concept of self-directed, other types of investment solutions arose, like a self-directed IRA LLC, where you can use a limited liability company wholly owned by an IRA to have more control and gain limited liability protection and more investment freedom through a self-directed account. Also, in the case of a solo 401k plan, you can have investment freedoms, invest in non-traditional and traditional asset investments using a solo 401k that is also self-directed. Now, some financial institutions will suggest they have a self-directed account. They say that, hey, we at TD Ameritrade or Schwab will offer you a self-directed account, but it's not really self-directed because all you can invest in are assets they offer, like stocks or ETFs or mutual funds or fixed income. They're not going to let you buy real estate. They're not going to let you invest in hedge funds, private equity, credit funds, venture capital funds, hard money loans, invest in your neighbor's business. They're not going to let you do that. So it's a limited self-directed account. But if you want to have the ultimate self-directed account, you would need to set up a self-directed IRA or a real self-directed solo 401k at a real self-directed provider like IRA Financial. IRA Financial does not compete directly with Schwab's or Vanguard's or TD Ameritrade's. Why we don't sell traditional investments? We complement them, meaning if you have an account with Schwab or Vanguard and you want to do alternative asset investments like real estate, you would then move your money tax-free to a company like IRA Financial and set up a true self-directed account, which will let you do any investments you want except life insurance, collectibles, and transactions that violate the IRS prohibited transaction rules. So it's a true self-directed account. It's not just self-directed like you can buy and sell stock at Schwab. Like obviously, it's my IRA. I'm the fiduciary of my IRA. Of course, I'm going to decide if I buy Apple or Tesla or Amazon. It's not up to my stockbroker. And even if you have total discretion, they have total discretion over their account, you cannot give up the fiduciary responsibilities of your IRA. It's still your call, right? Ultimately, it's still your IRA. But a true self-directed account will let you do non-traditional investments, non-publicly traded securities, non-stocks, non-bonds, non-fixed income, non-ETFs, non-mutual funds, i.e. the real estates, the cryptos, the golds, the investment funds, the private business stock, and have just a lot more opportunities. Now, a truly self-directed account may not be for everyone, right? If you just want to invest in mutual funds or ETFs or stock or buy fixed income, that's perfectly fine. But just know that when IRAs and 401ks were created back in 1974, the IRS gave us all the power and freedom to choose between an IRA that invests in traditional assets and an IRA that invests in non-traditional assets, non-public traded securities through a true self-directed account. Whether it's an IRA or a self-directed 401k, you have total control and freedom, and you are only limited to what's in the tax code. Whereas if you open a self-directed account at a traditional brokerage firm, you are limited to what they offer, meaning stocks, mutual funds, ETFs, or fixed income. They're not going to let you invest in your neighbor's son's business because they don't offer that. So they call it self-directed, but it's not truly a self-directed account because you are limited by their offerings on their platform. Whereas a true self-directed account at IRA Financial, you are only limited by the tax code. Otherwise, you can do it. We're totally agnostic as to what you invest in. Yes, we want all our clients to do well. We charge flat fees. So if your account goes from 100K to 50 million, you're going to pay us the same flat fee. So we're on your side. We're rooting for you. We want you to do great. We're not going to charge you more because you're a super smart investor. But it's up to you to decide if you want just an IRA or 401k at a traditional institution and invest in traditional assets, which is totally great and totally fine, or to get a true self-directed account that will let your IRA or 401k invest in non-traditional assets, which is allowed in the tax code so long as it doesn't violate life insurance, collectibles under 408, or violate the IRS prohibited transaction rules under 4975, which essentially means that your IRA investment has to directly or indirectly 100% benefit the IRA, and it cannot in any way personally benefit you, your lineal descendants, or entities you control. Otherwise, you can do it. So that is the definition of what is a true self-directed account. Whether it's an IRA or 401k, it's the ability to have financial freedom, investment control, take your financial future into your hands and not be limited by any traditional institution's investment platform, but only be limited by what the IRS prohibits you to do. And that's what companies like IRA Financial and this true self-directed industry offer. So thank you so much for listening. If you're watching on YouTube, really appreciate it. If you have comments or questions, leave them. If you don't mind and agree to provide a review or just give it a good rating, that will help boost the podcast and allow more people that could learn something from this topic to gain the ability to listen to it. So please, if it's not too much trouble, a good rating, a thumbs up, all that would be super appreciated. Otherwise, have an amazing rest of your day, and I hope to see everyone again next week on the next podcast. Thanks, and ciao.